Hi, my name is Rick Bloodworth. This is the Common Sense Christian Financial Channel, and I wanted to talk about the all-time record nominal high that the silver market hit today. Well, today is Black Friday. It's November the 28th of 2025, and silver closed on the spot market at $56.39. On the futures market, it was actually a little bit over $57 on the close. And so we're starting to see some upward movement in the silver market that appears to have a little bit of momentum behind it. I thought it would be really good to go back and look at where the silver market has been this year, because I think it'll help us to understand, maybe at least in part, where it might be going. On January the 2nd, when the market opened on the COMEX, silver was trading at $28.95. And for a period of several months, it continued to climb up to the point of March 28th, hitting a high of $34.58. And immediately there was a sell-off on that, between people taking profit and people short selling, trying to drive it back down, whatever the reason was. $34.58 was the high on March the 28th, and it remained the high for some time. As a matter of fact, it sold off so quickly that by April the 7th, it had gone down to $28.31. Well, that's a pretty good drop right there, nearly a 20% drop at that. But from that point, the market started steadily going up, very similar to what it did between January and March. On June the 2nd, it hit a price of $34.76. And this was a significant number because it actually exceeded the old high. And once it did that, the market started to take off. On September the 1st, there's a fairly important day because silver actually exceeded $40 an ounce for about the third time in history. The difference is when it hit $40 an ounce in 1980, it only stayed there for a few weeks. Again, in 2011, it hit $40 an ounce, and it only stayed there for a period of a few weeks. But in this case, we've now been nearly 3 months at over $40 an ounce, and as you've noticed, it's significantly higher than $40 an ounce right now. Well, on October 17th, we hit an all-time nominal high, $54.48. Now, if this was inflation adjusted, it certainly wouldn't be close to the $50 high that we had in 2011, and it would be nowhere near the 1980 high. Looking at an inflation adjusted high, if we wanted to match 1980, of somewhere closer to the $125, $150 range. And so we've got a little bit of ways to go in order to hit that. I do want to make a point about the 1980 run up in silver, because it was not completely natural supply demand. And by that I don't mean that there was not a high demand, but the demand in this case, instead of it being by industry and a wide swath of investors, this time it was by two brothers, the Hunt brothers from Texas. And they came across an idea that they could start buying up silver, putting it in warehouses, and slowly drive the market up. And it worked. As a matter of fact, it worked so well that the government took notice of that, and they and the Commodities Exchange got together and they changed the rules. And when they changed the rules in 1980, the market just absolutely collapsed. There's a reason that they were able to do that, though. The market, to a certain extent, was manipulated up by an attempt to corner the market, and so something that's been manipulated up can also be manipulated down, and that's exactly what they did. But again, 1980 was, before this last year, the all-time high, about $52.50. We exceeded that once again on October the 17th of this year, when it reached a high of $54.48. Well, again, the market was pushed down, and it was pushed down rather quickly. In just 11 days, it went to a low of $45.55. And so that's nearly a $9 drop in just 11 days. Well, there's no question that it was manipulated down. There was a number of big players that short sold the market, trying to push it down. They were successful to a certain extent, but the difference in this manipulation and the one that was done in 1980 was the market had not been manipulated upward by any stretch of the imagination. It was very much a natural supply-demand that caused silver to go up to $54. And so when it was manipulated down, they weren't able to keep it down. In fact, November the 13th, it tested that high again. It got nearly to that high. It got to $54.38 on the spot market. It failed at that point, and again, it sold off. On November the 21st, it hit a low of $48.63. And since that point, it has steadily progressed up. Again, November the 21st, that's just 7 days ago. 1 week ago, silver was at $48.63. Today, it closed at $56.39. So it's nearly $8 an ounce more than it was just a week ago. And again, I want to talk about why this is so important. When we talk about natural market forces, we really are looking at the supply and the demand, where people really want the silver, really need the silver on the demand side, and where people who are mining it or people who own it on the supply side would like to sell it. And so when a knowledgeable buyer gets in connection with a knowledgeable seller, that's where we get the prices. Since the prices in silver have been suppressed for some time now, there is a little bit of pent-up demand involved in this supply and demand situation. And because of that, we're starting to see silver start to shoot up. Something really strange happened overnight. You probably have heard about it, but the COMEX said that they had their computer system overheat. And when it overheated, they shut it down. Well, silver was really starting to go up at that point, and it's a little bit coincidental that they said the computers overheated at that point, because when silver went down about $4 in 1 day, just a few weeks ago, the computers did not overheat, even though there was quite a bit more trading going on at that time than there was last night. So there's a little bit of suspicion as to what was going on last night, but if it was an attempt to try and slow down the rise of silver, if it slowed it down, it was only marginally, because silver went up over $3 today. And so that's quite a significant rise for 1 day. But again, there are some unusual market factors that are occurring right now. There seem to be some people who would like to suppress the market who are not as able to suppress it as they have been able to in the past. And so this is something that should cause us to sit up and take notice. Well, what do we do? For those of you who are fortunate enough to buy silver close to its low, around $28 earlier this year, you've doubled your money. What do you do with that? Do you just let it ride? And of course, that's completely up to you, but I would like to give some thoughts on that, because one of the things I have noticed about a lot of investors is it seems like they almost have a religious fervor about their investment. They believe it can only go up. That's the reason that they bought it in the first place, and they're going to hold on to it until they're multi-millionaires. As a matter of fact, there seems to be a Bitcoin mentality to many of the investment markets, and this is certainly true with gold and silver, but particularly silver. Silver is a very volatile market, and I think there are a lot of people that are involved in the silver market that, again, almost have a religious fervor. They buy it, they will never sell it. And for me, I'm a little bit cautious to have that type of an attitude. For one thing, I started in 1981 investing in silver, and so I've seen an awful lot of ups and downs through the years. I've had a number of occasions where I should have taken profit, but I didn't take profit. And then there's been other occasions where I shouldn't have taken profit, and I did, and I missed out, at least with part of my holdings, on a fairly big run-up. And so through the years, I have developed a plan that has worked out fairly well for me. About 3/4 of my silver holdings are just for savings. They're something like an insurance account, but it's an insurance account that doesn't get used up. And this is important. Why do you buy insurance? When you have a house, you're going to buy insurance just in case the house burns down or in case you have some other kind of a disaster where you lose a big part of your investment. And since most people cannot afford to do that, and since most people have a mortgage and the banks who hold the mortgage refuse to take a risk on that, we have insurance. The difference in that type of insurance and financial insurance is this. The insurance on your house, when you pay the yearly premium, when the year's up, that money is gone. You may have had some claims against it. You may not have. Either way, that money's gone. You have to buy the insurance again the next year. But financial insurance, what I have used silver for quite a number of years, is completely different because what you buy, you hang on to unless you decide to sell it or unless you have to sell it. And again, when you purchase insurance, there are certain rainy days that could happen, and when they do, well, you've got the insurance for it. But again, financial insurance, if you put it aside and you don't use it, well, it's still there. And then next year, if you come back and you buy the same amount of insurance, this is called dollar cost averaging, and a lot of investors do that. I had done that for quite a number of years until I retired and no longer had a steady income stream through my salary. And so I handle my silver investments a little bit differently. But again, that's what I mean by financial insurance. And silver, gold are excellent forms of that. While they do fluctuate, and sometimes they fluctuate wildly, and sometimes they go way down, if you're dollar cost averaging, you can always continue to buy on the way up as well. And so over time, these fluctuations tend to even out. And because of that, you have a certain amount of holdings that are greater now than they were a year ago, 5 years ago, 10 years ago, or whenever you started. Now, the other part of that is this. I try to save about 3/4 of the silver that we have purchased through the years, but the other 25% we use as an investment account. It's completely different than savings or insurance. It's just that. An investment account is something that you typically trade in at least occasionally. And one of the things that I have found is quite satisfying is to take an occasional profit on this trading account. And the reason for that is you cannot lose money by selling at a profit. And so it's nice to sell it for a profit every once in a while. Sometimes it continues to go up, but that's okay with you because you still have the vast amount of your savings still intact. And as it goes up, if you have a plan, you can continue to sell as it goes up at different points. And then when it starts to come back down, you can buy it back at a lower price. Now, what happens if it doesn't go back down? Well, that's the risk you take. Sometimes your profits are limited when that happens, but markets do go up and down, and sometimes they go down significantly. If you have taken profit on the way up, you can take advantage of the decline on the way down, and you will end up with more of whatever it is that you're investing in, whether it's TNT stock or whether it's an ounce of silver or whether it's a bushel of wheat. Whatever you're investing in, if you sell it on the way up and you buy it back on the way down, typically that will prove to be a fairly good investment. And it's also encouraging. And there's nothing more discouraging to me than to watch the market go up rapidly, only to watch it go all the way down, and I didn't sell anything to take advantage of that. Well, this year, as in most years, I've had a schedule, and that schedule sells the silver at certain increments of profit. And so it's hit quite a few sell points this year, as you might imagine. There have been other years where it hits quite a few buy points. And so that's just the typical fluctuations of an investment account, and that's the reason that we have these things. And so maybe this will give you some kind of an idea. Find a plan that works for you and then go by that plan. Somebody once said, if you don't follow your plan, you don't have a plan, you just have a wish. And so if you do put a financial plan in place, make sure that you go by it unless something very unusual happens that would make you go outside of that plan. But anyway, the silver market is up significantly today. Will it continue to go up? Well, historically speaking, typically when something hits a new high, it goes on for a while to continue to make more new highs. It doesn't always do that. And sometimes when it stops going up, it goes down really quick. And this is very true of silver. Just from the fluctuations that we've seen this year, wild fluctuations at that, we should understand that. In 1992, silver was selling for about $3.90 an ounce. We've been seeing some moves in one day this year of close to that. And so there's a lot more volatility now than there ever was before, and we have to be nimble in what we're doing. Again, I would set a plan so that when it hits your sell points or your buy points, or if you're dollar cost averaging, you just stick to that plan. By doing so, you probably can't get hurt too bad. As a matter of fact, you might be handsomely rewarded for that. I mentioned this the other day, but it's one of my favorite sayings, and it's simply this: bulls get fed and bears get fed, but pigs get slaughtered. If you're positive on the market, there will be times you'll make a nice profit. If you're negative on the market, there will be times where you can make a nice profit on the way down, if nothing else, just buying at lower buy points. But if you get greedy, typically what happens is you get caught with one of these wild sell-offs and you get mad and you get frustrated and you'll blame everybody in the world but yourself for it. Get you a plan. Make sure it's a reasonable plan. Make adjustments to it as you gain more experience and as the market changes. But if you'll do that, I think that you'll find that the investment portion of silver can be quite profitable. Again, this is called common sense Christian finance for a reason. I still think the most important thing for us in this world is to serve God and Christ to the best of our abilities. Part of that service is a stewardship of the way we handle our physical resources. If you're trying to do the best you can in handling your physical resources so you can be a better steward of God's possessions, then by all means do it. If you're just greedy, and if you're just mad, and if you're just trying to build a bigger and bigger silver idol or whatever it is that you're buying, I think in the end you're going to be disappointed. In the end, we're all going to be dead physically, but spiritually, if what the Bible says is correct, and I believe it with all my heart, we've got an eternity waiting for us that is far superior to anything that we could enjoy in the silver market or any other investment market. But for right now, we have an opportunity, or we've had an opportunity. I hope you've been able to take advantage of it, but I also hope that you'll be prudent and level-headed in all this. If you are, I think it'll make you a better saver, a better investor, and certainly a better steward of God's possessions. Well, I appreciate your tuning in today. We'll talk more about the potential for upside in upcoming videos, but I appreciate your watching today. If you have comments, please share them in the comment section. I always appreciate them, even if you don't agree with me. Sometimes, especially if you don't agree with me, I can learn from your comments. So please share any insights that you might have. God bless.